Welcome everybody, thanks for joining us today. I'm going to be playing a hybrid role here as both moderator and speaker. And this is going to be a very interesting topic today as we have a lot of ICO projects in the crowd, a lot of investors, advisors, exchanges, and we want to really go over the entire journey and the life cycle of some of these value drivers in the space and why certain projects are extremely successful in comparison to other ones that are still on their way there. So to start off, I think what we should do is just start off by introducing each other. You can go ahead and start, Kenrick.
Okay. I'm Kenrick. I'm head of growth at Golden Gate Ventures. We're an early stage VC based in Singapore. We have two funds, currently working on Fund 3, and separately I'm working on a dedicated crypto fund for GGV. So hopefully we'll launch that soon. So I'm pretty active in the crypto and ICO space.
I'm John Kaplan. I'm actually a managing partner and CEO of Aslan Capital. We specialize in ICOs, token sales, token generation events by not only investing but also advising projects on a variety of topics. Go ahead.
I'm Rafael Denau from IG Investment Banking. So our company has been active since 1999 in investment banking just for technology company. Headquarters in Berlin. I'm the partner for Southeast Asia. So we just opened Singapore a year ago. So a lot of transaction, raising money, selling companies in the tech sector. But now we're moving to ICO and we're building some crypto indices as I'm speaking now.
Nice.
I guess I already introduced myself, but normally I'm a technologist. So I'm helping out a few ICOs. We are doing our own project as well. So in the daytime, I'm developing developers because you can't really find good blockchain developers. So I'm not doing that because of the fun, but because I have to. But it's really, I'm grateful to do it because it's really important to bring this whole field forward. So you really have to give back. So I'm the technology guy, I guess, here.
Nice. It's good to have a good mix of both technology, investment side, and the ICO side. So, guys, to start off, let's, I guess, talk about what the ICO space looks like today, and a little bit about where we think it's going, and some of the characteristics and attributes of what's happening. Kenrick, would you like to start, Kenrick?
Sure. I mean, we've seen crazy growth in the whole ICO space, right? I mean, the number of projects launching is just astronomical, and there's hardly any way to kind of keep track of them. I think what we look at and what we're still interested in, is still very much the infrastructure place. So personally, I'm not that keen on kind of direct-to-consumer kind of place just yet. I think it's really, really early still. We're still working on scaling solutions. I mean, Ethereum can only do 7 transactions a second still. Let's try and sort this whole space out before we look at the consumer space. So that's kind of where I feel the ICO space is at. So I think overall, it's interesting to see how the valuations kind of move in tandem with the market or with Bitcoin, if you like. But underlying, I think these projects are very, very different. So one token is definitely not the same as the other token.
Yeah, so I think the market is quite interesting, as we've seen that, $6 billion have been raised the last 2 years. Actually, 2.8 billion is just the last quarter of 2017. So we're seeing this exponential growth on the ICO, and we can see it here at this event. I mean, there's a lot of traction. Everybody is really looking at the space. From our side as banker, I think 2018, where we're interested about the market, is about indices, benchmark, audit, due diligence, is understanding which are the good companies and which are the bad companies, because there's both. There's going to be amazing companies coming into the market and really good tokens. There's going to be some really bad ones. So I think 2018 is going to be about putting in place the proper ecosystem that will help on that part.
From a technical perspective, it's quite crazy because I always advise all the companies to maybe go for Ethereum because that's the most mature technology, but from the technology perspective, it's quite experimental. So if you are really into technology, you can't say that it's not experimental. And lots of the people don't understand that. They think it's like really mature technology. So yeah, that's a big trend that or the up-and-coming new blockchains try to dethrone Ethereum. I'm really waiting for the new ones, because the other aspect which is really misunderstood, I guess, is if you have a token on Ethereum, it's not really suitable as a payment, because to send the token itself, you have to pay the token in Ethereum, so you can't pay the gas price in the token. So I'm really waiting for some new blockchain projects which are going to have decentralized exchange built into the blockchain itself, and then you can send a token and pay the gas in the token, because in the background it can do the exchange right away. So from that technological perspective, it's quite new, still new, it's exploding, and I guess most of the people don't really understand the security aspect of it, and it's very important. So this security issue is going to be more and more important as more and more money is flowing into this space.
That's a good point, very good point. So, you know, when we look into the valuation model of what the tokens are worth, or what we speculate them to be worth in the future, what are some of the things as far as venture capital side goes that you would look into, Kenrick?
Yeah, so this is something that I'm really personally very interested in, because this is going to kind of determine like where a token is going to go, and there are different buckets, right? There are different categories of tokens. So if you think of an Ether, it's a utility kind of token, or the valuation model there becomes quite clear. So if you look at Ether, if you look at NEO, for example, NEO, you could have an actual valuation model. Like there's a set gas price for NEO to deploy a smart contract, and you know the exact gas generation time that NEO takes to generate this gas. So over time, NEO generates gas. You can graph that. You know how much it costs to deploy a smart contract. So I need to make assumptions. If 100 companies deploy a smart contract, blah blah blah, you can back out the price of NEO almost. So that's very nice kind of to value. Ether a little bit similar. If the usage goes up, you can kind of attach a valuation to that. The more interesting tokens, I think, is still your Bitcoin and your Moneros, which, like, we all decide this as a market. Like, are we gonna view this as digital gold, yes or no? Like, it's still unclear, right? If it is, and if it becomes digital gold, then we have massive upside still. I mean, it's an $8 trillion market cap for gold. It's 100 billion for Bitcoin. So if it becomes that, it's enormous upside. But the market needs to decide that, and it hasn't made that decision just yet, I think. So some tokens, you can value them based on usage, pretty straightforward. Other tokens, it's going to be more of a conceptual thing, what the market will decide, like, is this digital gold? Is Monero going to be the privacy coin? So yeah, I think these are very clear distinctions. And then you have other types of coins which just provide like a utility. And I think these are very dangerous. So some tokens, all they say in the white paper is, we'll give you privileged access to our platform, or you will get a certain discount on our services, but they don't specify exactly what it is. If they don't specify exactly what it is, I cannot value it. Nobody can value it. It's kind of up to the company in the future to set whatever the discount is. So those I think are very dangerous. So I like these plays like Ether or NEO, where you can kind of put some valuation on the token.
Do you have anything to add, Raphael, or?
No, so I think to come back to what I just said before, we're talking about 6 billion raised in ICO. Equity financing was only 1.5 billion. So coming part to the VCs. And I think what is interesting now is when you buy a token, a lot of people need to understand what they're really buying. Because we talk about utility token, we're talking now a lot about tokenized assets. So Gibraltar Exchange was coming now. So that's exactly what they're saying. We're going to regulate. You know, if you want to list your company as a token, you can come to our exchange. It was great because we need those kind of platform. But the idea is that you can have a token or you can invest in the company. And I think this is also a confusion. That's why I think 2018 is going to be about clarity. Is that a token doesn't mean that you're buying some part of the company sometimes. It's a Kickstarter in some case. You're just pre-buying some service and nothing else. So some guys in the ICO, they've pre-sold 20, 30 million, 50 millions of services they'll need to deliver based on a white paper, and we don't even know if the tech is there. So I think the way you're going to do your due diligence on any of those tokens you really need to understand what's the value proposition. And in some cases, you want to directly invest in the company if you're an investor, because some of those companies are not good right now, but the underlying technology or the fundamentals are good long term. You know, with blockchain, I always take the parallel. I mean, I'm a Web 1.0 guy. I started internet in '95. And at that time, people were saying the internet is a scam, it will never work, you'll never be able to watch a video, it's slow. Yeah. And at that time, they were right. Everything was bad, you know? But we knew it was like the future of the economy. I think blockchain is the same thing today. Is Bitcoin Yahoo? Maybe, you know? Maybe it will disappear. So this is now 2018, the next 2-3 years, it will shape and new technologies are going to come. And same thing on how we're going to invest and also the understanding of what we're buying.
Lots of my friends and actually more and more people approach me and they say, yeah, I heard this blockchain thing, it's going to be maybe as huge as the internet itself. And I always tell them, no, I disagree. Because I think it's going to be much bigger than the internet itself. Because if you look at the underlying pillars of human society currently, the biggest pillars, legal system, finance, healthcare, supply chain, these big pillars, they didn't get disrupted so far, and now they're getting disrupted by blockchain. And as a technologist, and lots of my technologist friends as well, we get hung up to the technical details so much, and maybe we infect others as well. So most of the people are talking about, okay, how much transaction per second a blockchain can handle, right? But it's, I guess it's not really that important. Obviously, it's gonna be solved, as it was said previously. In 1995, the internet couldn't make video streaming, right? But it was solved. But what's much more important about this whole blockchain thing, that it's really disrupting these big pillars, and adoption and real usage is going to be more and more important. So we are really working on a business side as well. So not just the technology itself that, okay, make the healthcare more transparent, but make it get more and more people into it and hide the complexity. So because the everyday guys really shouldn't see the complexity. It has to be hide and make them easy to get involved.
Right, those are extremely good points, and I think we touched upon a lot of what the valuation is dependent upon. Now, I think we also have to remember as a community here in the blockchain and cryptocurrency economy and community, is that this is a new space, right? It's very disruptive technology, and it's going to take an extreme length of time to actually adopt certain solutions and processes that we can only imagine about today. And so the other focus we have to look at is the youth, and that's where the secrets are sometimes, in that if they decide that this is the technology that's needed to get business done, then it will become that. And some of the times we have to kind of look a lot deeper in this, right? So speaking of the valuations and diving into some of the aspects here, I think a good segue is to one of the main topics of this talk, which is why are the top 50 cryptocurrency coins on by coin market cap are valued at over 300 billion today. Why is that a thing?
So I think the first interesting thing is to see how it shifted in the last 6-8 months. Because if you look at this market cap, it was mostly Bitcoin, 79–80% 6 months ago. And post-Christmas, basically we saw that Bitcoin was only 30%. Right. So we saw that people are diversifying more and more their crypto. And I also think that now it's going to be interesting because indices are going to come and basket, and people are going to have an crypto asset allocation strategy. And this is where we're going now, because it's not only about Bitcoin only, you have Ether, and you have a lot of interesting coin, a lot of interesting technology. I think compared to the financial market, is that you cannot just buy coin based on some financial rationale. There's a technology rationale. You need to understand what's the underlying. You need to understand what you're buying. And that's where you see a big difference. But you've been buying a lot of ICO for a long time, so maybe you tell us how it has been evolving in time from today, and from when you started at the beginning?
Yeah, absolutely. I mean, in the beginning, it was a while back. It's a good story behind that, but I won't get into too much detail. However, invested in Bitcoin in 2011. And back then, there wasn't so much of a community like what we see today. I mean, this is absolutely amazing that we can hold conferences where internationally people are coming to contribute their wisdom, experience, and knowledge. However, the space has changed a lot in that it's created a new ecosystem. And that ecosystem has allowed for other projects to build upon it and solve different variety of problems, whether it's in the financial space, healthcare space, supply chain space. So that's the exciting part of this ICO arena, is that you are investing in new teams with new visions and ideas and disruptors. And that's something that I'm very proud to be behind as far as either the financial side goes or the advisorship side goes on token economics, or seeing how that technology is going to be adopted by certain industries and companies. That's a little sense as to where I feel the sector is going. But to dive back into topic, we want to kind of talk about how a team or a company can build a protocol that can get to the top 10 in market cap. So in your guys' experience, what are some of the characteristics you've seen that have allowed for these companies or projects to reach such a thing, or that they need to reach that next segment?
Well, I think we're still so early that is still pretty much anyone's guess. But I think it's pretty clear from the top projects that people are betting on these infrastructure plays, so the railroads that are being laid. So one of the companies in our portfolio, Omise Go, they did an ICO, and they're pre-product, but when they launch into the top 20 total market cap. So that's not based on their product, that's based on the thing that they're building, right? They were trying to build this really kind of core kind of infrastructure that's needed for so many other things to function. And you see the same thing with the top projects now. So Ether is your good example, but then you have Cardano, they haven't even launched, but that's an infrastructure play. Stellar, infrastructure play. So all these kind of things, I think that's what people are betting on at the moment. And then you have a couple of these more kind of commodity plays within there. But I think it's still very much in that space, and it goes back to your comparison towards the early days of the internet. Like you cannot have internet without your internet service provider, and that's kind of the space that we're building out. And towards your point of like what's going to be more valuable, the internet 1.0 or the internet as the blockchain internet we see now. In my mind, it's very clear, right? Like internet 1.0 was the internet of content. So your newspaper got disrupted, the post office got disrupted, they all got very upset. But the internet 2.0 blockchain, we're going to disrupt asset-based industries, and obviously that's infinitely more valuable than just content. So, and there's no question in my mind that's going to be much more valuable in the future. Yeah.
But I think in the next protocol, let's just look at trends. And I think there's 3-4 key trends we want to solve now. One is speed, one is energy efficiency, one is interoperability, so between the different cryptos. And I think those aspects are the important ones. In terms of tech, we're going to look at who's going to come with solutions that we're going to solve those big trends right now. The speed, and I would say security as well. We see a lot of hack going on, some exchanges are being stolen. And so I think those 3-4 big trends, this is what people are looking at first, then something really specific. That's my point of view.
There is Bobby Ong here around somewhere. I met him, I spoke with him. He's from CoinGecko.com. And what they get really right is, in my opinion, if you look at the projects and what factors contributing to their success measured by the price and the market cap they reached, is like, in my opinion, it's around 25% of development. So how is the development? Around 30% is adoption and 100% hype. So it's really, if you look at the projects, you see on the both end of the spectrum, like projects which are really solid and don't have huge hype, so it's really undervalued. So I'm basically searching for them. It's not easy to spot, but CoinGecko helps a lot. And you see projects as well which are basically overhyped. and the development is not there. So CoinGecko, I guess, gets this very right, that you have to have a balanced view of each step, like technology, adoption, and hype as well, because without marketing, without hype, no one's going to use it. If no one's going to use it, it's not going to get a high valuation and a high market cap as well.
So, as I understand, there's a big correlation between tweets of some influencers and price performance. Sometimes I get a feeling that there is perhaps sometimes unconscious coordination that, okay, one influencer see post of another influencer and think, okay, he may intend to sell. Perhaps it's good for me also to sell. He start to sell and post a tweet about this, and other kind of people who knows that these guys has something on their wallets and perceive this like a signal. How big is this coordination effect when one person with a big amount of bitcoins tweet and other kind of start to retweet it and so on? Is it a big influence of kind of few thousands of people on the market?
Yeah, I'll answer that one. I think a lot of these projects need a couple key ingredients to be really successful and increase in their market price and develop in their technology. And you know, some of those are their unique value offering, which is their vision, and the execution from the team that's actually realizing that vision. But beyond that, to your question, you know, it's the community. And I think a lot of these projects need awareness. So they could be the greatest project in the world with the most amazing team, but if they're not able to build a community in the cryptocurrency space, and they're not able to attract developers and other talent, then their technology will not get developed in the rate that it could be, and that's how it would be impacted. But I think, you know, that comes with a lot of strategic moves that they could make in terms of being more appealing to the community outside. So I think that impacts that growth that you're describing. I don't think it has to do so much about large BTC wallets, or I think it's more about just getting awareness. People understanding that this project does this, which is very unique than others. For example, there's projects that are interoperability plays, as you mentioned. Why are these projects very interesting? Well, they're able to connect different blockchains together to operate in unison. I mean, that's pretty powerful. Example, you know, maybe supply chain is working together with the healthcare blockchain in getting the medicine to the patient at the end of the day. And to be able to offer such a thing is a very unique proposition. So when individuals find that out and they can connect the two, they put their money behind it and invest in it.
And I also think they say the markets in the short term are voting machines, on the long term, waiting machines. So in the short term, obviously, influencers can disturb the ordinary markets, but on the long term, only the projects which have substance can survive. So I always tell my friends, if you really understand this field, that you don't invest in the short time. So I never get the people who try to trade. Obviously, I'm not a trader. That may be the reason for me. But in general, if you really understand this, it's gonna disrupt every single important aspect of our life. Then it's not gonna happen overnight. So you have to give it time, right? So you have to look for solid projects and keep hodling, right?
At the same time, there is a Bitcoin without any kind of operational business or team behind it. So this kind of support of community which puts the coin on a top list can have kind of extending effects. Yes, everybody sees this coin is on top, decide to use it for somehow, and then it lives its own life without any underlying business because it's popular. And as I understand, some groups can kind of support this popularity, right? Are there kind of chats of investors who kind of have a deep roots into networks and kind of know a lot of other influencers, so they can kind of coordinate to support one coin or not. Is it in the place in the market? So just a support can bring value to a coin to make it popular, right? Is it the case?
Yeah, I guess blockchain makes you ask the fundamental questions. I like it a lot because people say blockchain is not backed by anything, and they don't realize that fiat money is not backed by anything as well. So obviously some people not agree with that, but I think the money aspect and people believing that it has value, it's increasing its value. It's like same with gold. Why is gold cost like what it costs right now, right? It's because people are thinking that it's good store of value. And as it was said before, Bitcoin is a much better store of value because it's easier to divide, easier to stand, easier to store. Obviously, you have to think about security and all the other aspects, but it's much better in many, many aspects than gold because it's limited. It's not even static. It's actually deflationary because people are losing these private keys and all the stuff. So it's not even not inflationary. It's deflationary.
But I think what is key is to really split and make the difference between people who are trading and they just see that as assets. And I think it's the same in the financial market. Some people play on the stock market, they don't even know almost what the company are doing. You know, they don't really look at the fundamentals or the P&L. They just say it's a good buy and they hear the noise. You know, and I think here in the crypto we have the same thing, and we have people that are looking. So either you want to be the Warren Buffett of crypto, you're going to build a portfolio on buying the right cryptos on the long term, and say, okay, that's going to be for to pay the college of my kids, you know, or you just want to buy on a daily basis. But we've seen the volatility in the cryptos. There's no proper rationale to really understand why it's going up or down, to be honest. Or you know?
Right, exactly. I mean, and by the way, I mean, I'm sure in the audience we have a lot of major technology enthusiasts, and I know that we're talking a little bit more on the finance side and the number side, but I think that they relate, right? Because the numbers kind of give exposure, and that exposure allows for the technology to advance further. But you know, in terms of the community building, I think everything that has been, you know, has risen in value has had a community, whether it's real estate. It could be a multi-family group, and that multi-family group could be, you know, recruiting a lot of members to it by sharing the opportunity and the investment, and that sector could be expanding. So I think, you know, when there's a lot of fans out there of, for example, interoperability or the financial infrastructure, they get behind it, and that's because maybe they understand it because they've been in that sector and they know the growing pains and the disruptive nature of that project. And I think that's where a lot of that comes from. Yeah, I think that's where the fire of the investors are from.
Yeah, I think it's actually a plus that Bitcoin, for example, is supported by such a decentralized, like, anonymous community, if you like. I mean, imagine, God forbid, something happening to Vitalik. What's going to happen to Ether, right? So, or if it's a centralized company, something happens to that company. Bitcoin has proven itself for 10 years now. It's still here and it works, and it hasn't been hacked. There hasn't been any problems, and there's no leader. So I think that's one of its biggest strengths rather than a weakness.
And I also would like to add that Vitalik Buterin tweeted that 95% of crypto projects are gonna fail. It was retweeted thousands of times, and he answered the next tweet that, oh, it's quite funny because I just exchanged that startups to crypto projects. So that's the thing. It's like in crypto, everyone can interact. So for us in ETHIL, everyone can invest. It's good. But people don't understand from the everyday guy's perspective. They don't understand the risk. That's why diversification is very important, because this is a high-risk business. So even though you are solid, you still can fail, because basically these are just startups using some technological stack which is called blockchain, some incentivization as well, which is nice, but still on the fundamental level, this is startups. So this is I see a huge risk here, because one side, it's good because everyone can invest. They don't have to be sophisticated investors. They don't have to have $1 million and so on and so on. But on the other side, I see a huge risk of everyday guys investing money and they don't understanding what they are getting into. I don't know what you think about this issue.
I have a kind of one of the example of failing and successful startups. There are maybe dozen Bitcoin forks each month, right? They're technically pretty similar, but very few of them unexpectedly or expectedly worth now thousands of billions of dollars. They're technically pretty similar. So what is the difference of why some of the forks became so popular and worth so much money?
I guess from a technical perspective, you have to get miners on board. So if you have some unique value proposition for miners, for example, if you are ASIC resistant, so you are basically using an algorithm which is resistant to specific integrated circuits, so you can't get ahead in the game if you do some specific circuit, then it's a good value proposition for everyday miners because they think, okay, I can mine with my GPU and I don't have to buy some specified miners from China or from anywhere else in the world. So obviously you have to get miners on board because if you don't get them on board, then it's not going to be secured and actually it's quite it's not profitable. They're not going to mine it. And on the other hand, you also have to get users on board as well. So you have to do marketing, you have to get the technical side right, and you have to have luck as well, I guess.
Also, there's a difference between market cap and what they're actually worth. So it's very different from equity, right? If I have $500 million in equity in a company, then somebody might actually buy that whole chunk or even pay a premium for it just to acquire my company. But nobody's going to acquire Bitcoin Cash for $3 billion or whatever it's worth. It depends on the liquidity in the market. If somebody dumps a whole lot of certain coin, the market cap will, as we've seen over the past month, unfortunately, the market cap will just tank. So it's not that these things are actually worth billions of dollars, because you cannot get it out in that worth. It's very different from equity.
But to come back, either it's forking or either it's an ICO, and I agree with you, it's a secret formula. You have different aspects. You need to have a proper communication strategy, user from the supply, demand side, from everywhere. So, and we see that a good ICO is a lot of things together. It's not only technology, it's not only communication, it's not only the team, it's not only about your white paper and how you're going to deliver, it's all of it. And I think it's kind of cocktail strategy on all the elements that makes that it works or doesn't work.
Right. So, shall we turn to questions? Well?
Yeah.
Yeah. Who has a kind of something to add or to ask question? And by the way, how many investors are there? Are there any investors? Yeah, great. So are you kind of recommending to buy now or wait for some time? Who thinks that market shall kind of more likely to go up and down? Oh, short selling attitudes.
Then I'm buying.
Huh. So who can share the view on the market? Why it shall go down or up? What is the momentum and the long-term upside or downside forces? Perhaps somebody of you or in the room who wants?
Yeah, I think long term, I mean, we're still at a beginning phase. If you look at venture capital, this could be almost after the seed round. We could be in the Series A round. That's one perspective, and some other people have the perspective that we're at the final stage and we're going to go crashing down. I don't think that's true.
We're in a bit of a down round right now.
Yeah, it's okay. It happens.
It depends on the time horizon you look at, because I saw a tweet and the guy said a few years back that, okay, the price of Bitcoin is stabilized at $14. I'm sick of it. I'm quitting. I'm taking my losses. So if you look at the whole time series, whole time horizon, you see that it's still upwards. Obviously, there's some minor correction, and it's quite funny to say minor because in percentage-wise, it's quite big, but still it's upwards on the long term.
But I think it's a good question, but I think the underlying question is like, when you talk about market, what are we talking about? That's why we're at IEG, we're really interested about indices, because today it's all about Bitcoin. You go on CNBC, you open, and people are saying, oh, the crypto is like Bitcoin, Bitcoin. And actually this panel here is to talk about all the other altcoins we have right now. We're talking about 50 of them, and it's about diversification. So I think now it's really important to understand what's the benchmark. What are we looking at? Is still Bitcoin the king, and we're just looking at it? Or maybe at some point Bitcoin might crash, but maybe we're going to see a lot of other altcoins or portfolio or specific group who's going to be performing. So now we need to think differently. I think that the market has moved, especially as we said before, Bitcoin used to be 70–80% of the market cap. Now it's 38%. I mean, it's moving every day, but we get to the point 2018 on this diversification in the crypto world. So on the question, what is the market going to be doing? Which market? We're talking, and same thing in the stock market. You're talking about the Dow Jones, the CAC 40, or the NASDAQ. Here I think it's the same thing. We have different type of assets, and we're going to have different type of indices, and it's going to be and different type of token.
I have a question. What's going to happen in your view if governments now really go through and crack down everything? I mean, I'm a little bit worried. For instance, for me, the US market is not interesting. All the lawyers in Europe are telling me, forget. People from US citizens, don't touch them. I'm reading now that large banks like JP Morgan are not accepting conversion with credit cards to buy cryptocurrency and other goals. So what's your view if now there is a concerted action, probably after Davos, you know, of a crackdown on the cryptocurrencies?
I'll take that one.
Yeah.
And by the way, why you think it's crackdown? If it's who coined this term? Yeah.
What was the term?
Crackdown?
Oh,
What is going on? Why?
we could redefine that, but basically, I think it's we could look at it from a good perspective in that the government and regulation is stepping in to securitize the space so that the utilities can have some security aspect to them. And the reason why that could be a good thing is because banks and large institutional capital can actually have a vehicle, and family offices can actually have a vehicle to invest into cryptocurrencies and this new bull market, new innovative market of disruptive technology. And that's a good thing because a lot of the clients of these family offices, banks, and large institutions are going to their managers and saying, how come you haven't invested in these new things? I mean, I want to have a diversified portfolio, and you're not putting a certain percentage allocation into this. And that's a big complaint, right? And after that complaint, what follows? Well, they pull their capital out. So I think there's two sides here. I think the government wants to regulate it and make it a more structured space, as well as institutional capital wants to actually meet the demands of their customers or their clients. And I think it's full of opportunity for that reason. That's why I think it's not gonna, that's why I believe that it's a bull market still, and it's still early stages. We're just getting started.
And I would add something is like when you're talking about government, you're giving the example of the US. I don't think US is maybe the best place right now to do an ICO, but some other governments see this as an opportunity. The Swiss, they do. Singapore do. MAS just provided guidelines from the MAS. Japan do. Gibraltar do, apparently, as well. So what you're going to see now, a lot of people are going to say, oh, we're going to ban, we're going to do this. And others are like, no, it seems like a good business, Especially, I took a good two examples. I mean, I'm Swiss, and I live in Singapore, and private banking business is declining. And those two places I've been living from the private banking for the last 15 years. And now they're looking what's next, and it's been fintech. And then they understand that all the crypto market is the next big thing to replace some of the banks. So either you embrace it, okay, or not. But I think some governments will just say to the US or others, oh, you want to ban? Ban. But for us, we think it's interesting. And we're going to attract those companies. And I think it's not by chance we're in Singapore today. I think it's part of the places where we think it's relevant to talk about crypto.
Yeah, I couldn't agree more because from the game theory perspective, even if some governments start to ban it, the incentive for other governments to support it is going to increase because the money which is flowing into it's huge. So as it was said before, it's like for the most, from lots of countries, this is a huge opportunity. And 2 weeks ago in St. Moritz, one of the leaders of Switzerland said, okay, Crypto Valley is over because now it's going to be Crypto Nation. So they're pretty much behind this whole crypto stuff. And now, actually, the European Union is like they allocating around $350 million to crypto projects, to crypto research. And Estonia as well, they're very crypto friendly, very digital friendly. So yeah, obviously there are some countries which are against it, but from game theory, I don't really think it's gonna happen that everyone's gonna ban it. And until it's not happen, it's gonna flourish.
I think another thing is like countries can learn from what Gibraltar did. And this was an interesting story that I heard recently in that Gibraltar was one of the first to go through with online gaming and structuring that entire process and allowing for it to happen. And now they own 40% of the esports or online gaming economy. So if countries can learn from something like this, what they can understand is that if they actually are first to adopt cryptocurrency in the blockchain environment and really allow for it to thrive and regulate it correctly, then they can actually be leaders in the space on this as well. So.
Okay, and also, if somebody has a view, why market shall fail or grow, let me know. Okay, I see you.
Thanks. I was just interested to hear from your perspective and I suppose potentially my own speculation around the nervousness in the market at the moment linked to the G20 meeting, for example, happening in March. I'm just kind of curious from your perspective, how much do you believe that's factored into the bearish environment that we're currently in? And I just interestingly found out just now that the South China Morning Post announced that China had nailed the final, hammered the final nail in the coffin by banning access for Chinese citizens to even trade via foreign exchanges as well. So, you know, there's that kind of overall nervousness and leading to the G20 again. Just curious to hear your perspectives on that.
This is just my personal opinion, but I think these markets trade much more on technicals and on liquidity than some of these big news items. Sure, they're factored in there, but there was no positive news item that propelled Bitcoin from 10,000 to 20,000 in a month. And similarly, I don't think there's a single news item that propels it back down from 20 to 8 today. So I do think that goes into the price at some point. I don't think it's a similar question to like what governments are going to do about this. I think they can slow adoption. They cannot stop adoption. So yeah, it's hard to say, right? But I think if you look at the market right now, it's very clear. It's just trading on technicals, and once there's a sell-off, again, there's not super high liquidity in many of these tokens, and any kind of move to the downside is just exaggerated by people getting scared. This market psychology, technicals. At some point, news is being factored in, but I do not think that is a major kind of influence. But that's just my opinion.
Yeah. By the way, why China is one of the first to tighten regulation? What is the political driver here?
A political driver of China?
Yes.
Exchange control, right? What do you mean?
I think that capital controls which are in place in China helps to kind of preserve power, because if entrepreneurs can freely kind of send money outside, then you have less control over entrepreneurs. And also they can potentially finance opposition, right? Especially via cryptocurrency. Yes. And third, of course, it's a kind of a risk of unrest of people who kind of contributed and lost money. However, why would they kind of ban foreign exchanges? I don't think it's the third reason, right? But first two reasons still works there, right?
So I think something that is important is that the biggest company in the world lobby government to be sure that nothing change, okay? And they can keep on milking their business that doesn't make sense anymore, everywhere, all around the world, you know? That's how the world is built so far. So if you look at fintech in the last few years, we see an amazing number of fintech companies coming into the market, talking to banks, talking to insurance, and we're saying, oh yeah, really interesting. We'll think about it, we'll come back to you. And the reality is that fintech companies have not been doing that well, in the sense when you've seen all those startups all around. And then blockchain arrives and saying, you know guys, we don't need you anymore. We're gonna do it our way and we're gonna go around. And I think today that's the reality. All those big banks are pressuring governments, say we're going to lose our business. And that's the underlying right now, is that all those big institutions are at risk. And it might go so fast that they will not even understand what's going to happen to them. And I think in really big market, as China or US, for them it's more a threat. I think for smaller market, it's an opportunity.
So your point is that there are big politically powerful banks in China who do not want to kind of lose the space for new private companies, so they kind of remove them,
Sure,
and
but
probably creating their own crypto exchanges right now.
But actually, it's a whole market. Let's talk about tokenization of real estate. You know, if tomorrow I can have my apartment was tokenized, I don't need the bank. I said, Valentin, borrow me money. I give you some token in exchange, a warranty. We do a smart contract. So that's multi-billion-dollar market from banks. You're just going to take over. It's not even about the crypto. It's just about with the blockchain, are you going to be able to take away the middleman who's the bank, and that can go really fast.
Oh, they should be very kind of visionary to see the big threat there. I think they more probably they see opportunity to kind of get control over a new market, because when this tokenization happens in the future and replace mortgages, who knows? It can take a few years. There's no evidence yet, clear evidence for big players that it works. It's still like in an early stage. So I'm not sure that they can be in fear of small startups. They can fear when they see, oh, they are losing market share, then probably they would be motivated to act in this way. Probably I think this is more about capital controls and crypto business, which is growing fastly, and this, not tokenization. Tokenization is next. You know, these crypto exchanges became attractive for somebody inside kind of big companies, big banks, and perhaps they kind of doing this. And there was a news that Chinese companies announced that they are going to issue their own cryptocurrency, right? Chinese government discuss, yeah?
There's a big difference between the tokenization of assets and actual coins being used as currency, right? So an actual digital currency is being seen as a threat to the central bank and the money supply. So if the central government loses control over the money supply, it cannot set interest rates. That's kind of, there's no way they're gonna kind of want that. So that's what they're fighting against. They're not against the blockchain technology, the tokenization of assets. They can see that. But giving away kind of money, that's much more dangerous.
Yeah, this is important thing. And by the way, in America, Federal Reserve is far more independent than in China. Central bank is pretty dependent on government. So it's influenced and dictated by government. But in the US, it's relatively private, right? Okay.
Thank you so much for the insightful wisdom that you guys have. I just have one question. Do you have any tips, like maybe like one tip for people who don't know anything about crypto or blockchain on how to identify a pump and dump coin. Because from what I understand just now, there are a lot of aspects to it, like technology, like layman would know, like public relations person like myself, I'm trying so hard to learn the tech behind it, but it's so difficult. So do you have one tip for the layman so as not to get scammed for pump and dump?
Look at John McAfee's Twitter.
Seriously? Seriously?
Yes.
And don't do that.
Okay, two more questions.
Okay. Julian Hoss from 10x said that if you have a portfolio of 55% Ethereum, 45% Bitcoin, you can't really lose too much on the long term. So if you buy some really well established, so you don't want to get greedy, because if you don't understand the market, you don't understand the technicalities, then please don't go for the small coins. Choose some really well established, nice background, nice development, nice marketing, all the stuff. So if you buy just a few of the big ones and you just keep them, you don't try to trade, it's quite safe thing to do, but obviously I can't give you an advice about that financial wise, but I would do that if I were you.
But me, I would keep simple. As Warren Buffett said, only invest in what you understand. If you don't understand, don't put your money.
Hi. You guys mentioned, a couple of you mentioned about the interesting alternative currencies right now are the ones that are considered playing infrastructure, right? What sort of other infrastructure opportunities do you see coming that are still missing in the marketplace? What are the ISP equivalents or the AOL equivalents of sending out disks for people to start accessing the internet in the Internet 1.0 back then? And also, when or what are the trigger points beyond which, beyond infrastructure will be interesting? You know, like the GeoCities, the Yahoo, or maybe even the Google later on. You know, what should we look for in the infrastructure space before those 1.5 wave, if you will start becoming interesting, at least from the point of view of investors, to start putting in money into these projects?
I guess everyone is looking at infrastructure coins and blockchains because what happened with Ethereum, they shoot up from 30 cents to $3, $30, $300, now $900. So everyone's like, okay, it's happened with Ethereum, so wow, we want to catch the next Ethereum. But I guess we passed the point where infrastructure is the biggest barrier. Obviously, as I said before, if a blockchain comes along with a decentralized exchange where you can pay the gas price in tokens as well, it's going to be awesome. But otherwise, I guess I would recommend for you to look into coins and projects which actually solving real issues. So it's not just about some nice payment, because if you look at the field, all the established players, they either way infrastructure coins or about payment or storing money or sending money, storing value, all the stuff. So you really should look for some projects which solve fundamental problems for real people. That's going to be the future, obviously.
And that was the previous question in discussion. We're talking about trends. So for sure, speed, the calculation, and security, all those aspects are, I think it's all about trends. Mega trends.
I think it's a great question. I think, you know, from what I understood, you were talking about which infrastructure opportunities are there today that have not been met, or the demand has not been met for. I think that question can correlate with your experience in your career and what sector you have the most experience and understanding in, because there you can see the pain points in what can be serviced through the blockchain. You know, so it would be harder to see that outside of that scope. But if one were to look, I think that, you know, I would just look at what pain points there are in other spaces that blockchain can really penetrate and create efficiency and, you know, decrease costs in and really disrupt.
Yeah, to that point, exactly that. So look at two things. What is blockchain solving? It's good in places where trust is missing, and it's good in places where there's a very large central party extracting like a disproportionate amount of rent out of an ecosystem. So if there's an industry where trust is missing, supply chain, for example. I don't know if that's going to be a killer app, but for example, could be an interesting one. And other places where, again, central parties could be banks, could be insurance companies who sit there in the middle, take 30% cut, and are not really needed. So I think those are going to be the kind of the hot ones.
So one more question.
Hello, my name is Paris. I'm an analyst from Russia, and my question is, which year you think will be like, you know, a turning point when the blockchain technology will be affecting the global economy in a noticeable, way? I mean, the impact should be really huge. We now have a hype around startups, around cryptocurrencies, but I mean, which year is like a year when you think is like the global economy will feel the influence of blockchain efficiencies and so on? I mean, at least in 100 billion, size, or maybe $1 trillion size, or something like that. To 2020, 2030, no when?
It's a good question. That depends on what project we're describing and how it's impacting the global economy, and which sector it's impacting. So it could be supply chain in a global sense, right? And the question for what time frame that looks like. I mean, we know regular technology takes on 3 years on average to mature. So when it matures, then that, a lot of the problems have been solved and so forth. But blockchain technology and the cryptographic assets and the cryptocurrencies, they're very new, right? We don't even have the demand for engineers, blockchain engineers, specialized engineers, met yet. And so I think over time, as we educate more engineers to get specialized in this, we're going to accelerate that growth. But I think it could take a lot longer than 3 years on average in the regular software realm, possibly 5, 10. And that depends on the sector, right? Global impact depends on that.
I guess most of the cryptocurrencies exploit a network effect, which is basically if you are on an exponential process, you're standing on it. If you look back, it looks flat. If you look forward, it just shoots at the moon. So I guess we are at around the turning point now, maybe. So yeah, obviously we're quite early, but maybe we underestimate it on the long term. So we should guess like 2025 or 2020, but maybe in 2 years or 1 year, it's going to happen.
I think it will also depend on how big companies and government will embrace. I think there's been a lot of learning with the internet. The last 20 years, everybody that tried to fight the internet basically has been killed by the internet. So I think a lot of people realize that they have to embrace and to work with it, then fight. So I think that's going to be one important element, is how all the Fortune 500 companies and the government will work with the blockchain. And we're going to see how it's going to move in the next 1-2 years if they start to jump in some projects, but it seems to be the case already.